Hello friends, welcome back to Mahalingam Market Rhythm. This is another holiday technical and chart analysis video for my followers. We have seen the last trading session, that is last Wednesday. We have 800 points Bank Nifty rally. How this 800 points Bank Nifty rally, where we can spot the trade entries for a short, how do we roll on our winning trades, how the Camarilla and how the moving average helping us to keep the trade in, whereas we are booking our early profit. So here I explained all in this video. So I request you to not to skip the video, and also request you to subscribe the channel to upload the next level of technical evaluation videos. Okay, so hope you will enjoy the video. Don't forget for the subscription.
Today, I just want to discuss with you about the Bank Nifty movement for the past 3 days. Okay, here I am using Camarilla Pivot just for the reference. Okay, this red color is a Camarilla H5, this Camarilla H4, and green is a Camarilla H3, respectively below L3, L4, and L5. Look at the chart first. Opening exactly Camarilla H5. Okay, if it is opening above this H5, it is well and good for buying, and the momentum may continue, but the chart terminates at H5 and all the way back to the H4. Now the chart is holding H4 for 10 minutes and giving the breakdown, where the breakdown take to the market all the way down. So how it is happening? Here you can see in the previous day and before also we have a good amount of resistance at 36,250. Okay, so this is my resistance bar. Okay, where the gap up from 35,900 to 36,250 and all the way had a selling pressure. I have few trend line. Okay, I wanted to just explain about the trend line. See, when this trend line getting break down, then it has to connect to its base. See, the trend line base is 35,532, and I just draw this trend line. The big breakdown candle break my trend line, then all the way coming to the baseline. Can you see this is my baseline? So the first confirmation, when this kind of long range trend line getting breakdown, so be cautious and you have to go long on the verge of breakout of the trend line. Okay, as long as the trading is below the trend line, there is no possibility for the reversal. This is first trend line, and you can see the second trend line. I am just connecting this trend line with the previous day support point, which is around 35,633. So after hitting my trend line, see there is some sort of pullback, 1, 2, and breakout my trend line. Sorry, break down the trend line. It is coming all the way and test its baseline. Okay, and now I am having another trend line. Okay, can you imagine that where this trend line base is connected to? Oh my god, it's going all the way down, and you can see this trend line connected to my 34,600. So what I would like to confirm here, this kind of large trend line has to be hold. Look at this, it is holding above. Look at this, there was some pullback, but this pullback not able to sustain, and once this large trend line breakdown, then coming back for retest, again punished, again coming back. Okay, but the reversal is not successful, all are going down. Okay, now whether this market is going back to 34,600, another 1,000 points, yes, it may be, but it is not quickly as the previous day. Okay, now what may happen, it can be go for the retest point 35,700 and pull back, again it is getting retest. Okay, then all the way it can go up to 35,900 to 36,000, then you can see the reversal. Okay, this is the first scenario. Okay, now how do we able to predict that this kind of massive bear trend? Number one, you have to focus your head. We are having very good head resistance 36,200. Okay, point number one. Point number two, you can see the large amount of consolidation in the upside. Okay, if you look at it and if you draw a wedge channel, see, actually this is your lower support area. Okay, from here your upper support resistance area here, in this wedge pattern, the 50% of the wedge not able to cross here. Okay, this consolidation or the congestion zone remains for 2 days, I think. Okay, then we have all the way downside. After this consolidation, after this congestion phase in the upper side, market not able to go upside. So on 17th, market crashed almost 420 points. Okay, after this congestion, market crashed 420 points. Then somewhere it can manage to recover with the previous crash low. Okay, look at this line. So market somewhere able to pick up from this point and closed at the 35,900. So it is giving you some signal that there is a buying interest in the market. However, as we see, this is the number one factor, that we have a head resistance. After the congestion zone, market getting crashed. Okay, normally when market crashed, when that point coming back, the people are interested to short again, correct? So here the congestion, after the congestion you have a 400 points downside rally, then market picked up and going to test the congestion zone again. Okay, so here you can see 400 point down rally, then you have 500 point upside rally, that is also within a short period of time. Okay, now what it indicates, that people are sitting with huge money to short the market at the retest point. So you have a congestion zone, then downside rally. After downside, it is pick up on the upside, then retest the congestion zone, again sell off. So what it all indicates, market is in a bear grip. Okay, in this bear grip, you have to take your long position either bottom of the support area, or you can go long on the breakout of the resistance point. So you do not play between this area where you can chances of wiped out your capital. See, if you are buying, then you have to sell immediately here. If you lost the chance, then within 30 minutes time, market back to the pavilion. So you may last the buying position. That is what always concentrate where we spotted the price. If you are the seller, wait for the market consolidate in the upper side, and it should not break the upside resistance. Okay, if consolidation market breaks upside resistance, we have seen the past that it will fly off. At the same time, when the consolidation market getting downside, okay, as a short-term scalping trader, you can buy here and you can sell, but looking for the short long term, okay, which means you can carry your short, then you have to short in the retest point, okay, where you can get the decent amount of profit. Now I wanted to show you, okay, I am going to turn into day chart where we can able to come to the conclusion. See here, this is the day candle. The day candle swollen all the prior 9 candles trading range. So consider this as a big bear grip, number 1. Okay, number 2, if you see the bull grip on the same amount of height, you can see 35,200 to 600, which means 600 points. Okay, just you can measure the leg of the rally. So I would prefer to start from here 35,100 to the breakout is 35,200, almost 1,100 points. And the same rally you can pointing out this from here to here, which is again 1,100 points nearly. Here this is 1,095 and this is 1,043. Now what will be the trade? See, the trade will be, this is your full cover first leg, and the same, this is your full cover second leg. If you are watching my previous video, normally the third leg is the reversal point. In this case, the second leg itself, it is coming to the reversal side. Okay, if any break of 35,200 to 35,000, you will see the trend back to the pavilion of almost 35,400 to 34,400 to 34,100, or it may test its swing low of 33,900. Guys, it will not come for the Friday, or it may not come for the next week Monday, but chances are in the downside. Okay, now this is a very big bar of the bear trend. It may give some pullback, so the pullback may be within the trend line. So watch this trend line. I would prefer 35,900 will be the stop point for the further rally. On the Camarilla front, now I am just removing all this. Look at the Camarilla, how it is helping you to trade in a live market. So just keep away your fear and oh my god, market will go up from my entry. No worries. Check this. Market started H5 of Camarilla and market closed in the L5 or the Camarilla. Guys, this is what my classes are teaching you, that if the trend is moving up to H4 and wait the trend back to the H4, then you can go short in H4 with the stop of H5. See, if this H5 is a big amount of point, then you can make it a 50% of H5, go short in H4. Your target will be H3, and watch the H3 how the price action is. If the trend not able to cross 50% of H3, keep holding your short, okay, or your position, then wait for the L3 as your target. Again, keep holding your position. Since you are shorting at H4, you got a very decent amount of profit, which you can able to hold, okay, for the profit continuation. Do not book the profit in nearby H3 or 50% of H3 where you cannot get the good amount of profit. So to run the winning trade, keep hold the profit in the Camarilla pivot levels. When H4 is breakdown with the big candle, okay, then short at H4, hold the trade, okay, until it crosses H3. Okay, now when the H3 comes, you can revise your stop loss to just above the H4, okay, which is cost to cost. Then keep hold the trade, trend breaks H3, all the way moving to L3, revise your stop loss to 50% of between L3 to H3. Then wait for the trend moves down, and trend moves all the way down, L4 all the way down, L5 all the way. You can keep holding, keep changing your uh, trailing stop loss, which is 50% of each levels, okay, until this line your stop loss may not hit. Once the L4 coming closer, then maximum people may wind up the trade. If you're holding trailing your stop loss between L3 and L4, here your trailing stops hit. But normally my advice, when you are seeing this huge amount of bear trend, okay, Camarilla is your first reference point to roll on your position. Also, you should have the 20 period moving average in your screen where you can able to identify the further trend. Sorry, 20 period is this one. Okay, look at the moving average. If you are shorting here, you have to wait. The candle, consecutive candle, has to hold the 20 period moving average. Have you seen any of the candle is holding above the moving average until this small pullback? Okay, that is also below the H3. So your reference point, the moving average as well as Camarilla to hold your trade. See here also, when we are trailing our stop loss to L3, H3 50%, okay, now you can see the moving average. It's very nicely handled the trend. Okay, there is no chance that we can book our profit immediately. Okay, see in L3, L4 also the moving average, the trend is very much below the moving average. So whenever the trend back to test the moving average, people are thinking that yes, this is the average price to sell, so they are selling. Here it's coming back, average price selling, and you can see here after getting L5 there is a good amount of pullback rally back to the moving average. Again people are selling. So why people are selling in the moving average, which senses that people has to give the right price for selling. Okay, you should not sell here, you should not sell here. This is not average price, or this is not the right price to sell. So wait for the average prices coming at the moving average scale, then you can sell. That is the power of moving average. So if you are following the moving average along with the Camarilla pivots, you will be in the winning side of the trade. I'm just scrolling back. Look at this. After the cutting down, you are giving the good amount of downside rally, and you can book your profit here. And below, in the upside trend, okay, see here also the trend is below the moving average, so you can keep holding your trends. Look at the Camarilla L3, L4, L5. On the L5, this is the time for pullback. In the upside, after the H3, see the good amount of rally where the moving average supporting you to hold the winning trades. And move back. Here you can see, wow, what a large rally. What a large rally. After this H3, see, trend is remains consolidate at H3 and H4. Once H4 breakout, you can see the good amount of rally. You can see the support of moving average with Camarilla. This is your H4 and this is your moving average. So the trend breakout H4 and moving upside and settled in moving average and again upside, all the way upside, and you can book your profit around this corner. So what is the point that you are going to get from this breakout 34,800 to 35,800, which is almost 1000 points of rally you can easily capture with the help of Camarilla and moving average. Okay, I hope you can understand the video. I will see you with the next video with a good amount of technical indicators and the chart technical analysis.
Guys, that is the end of today's video. I hope you are enjoying the video by referring these technical indicators and then the price action movements. I just want to tell you one thing, that I am the guy explained my episode 6 price action. If you review my episode 6 price action video, I have been told that Nifty will going to hit 16,700. Okay, that is a guts you are having through this chart analysis. So people not looking that episode 6 video, please go and check episode 6 price action video, how I updating the Nifty movements. So that's it. See you in the next video with a good amount of technical analysis. Hope you are enjoying. Thank you.